Hello, everyone. I want to cover Bank of Nova Scotia. Now, it's dropped significantly since mid March, and it's been a rocky road for this bank stock. Now, this stock is traded in the Canadian Stock Exchange under the ticker symbol BNS. And I'm super interested in the stock because I own positions in it. So I'm wondering, is this dividend safe? Is there opportunity right now because this drops 36% from all time highs? And whether it's undervalued, should I be gobbling up more? So, in today's video, I'm going to cover its latest highlights from its Q3 earnings because that is going to give us a bit of insight of what's to come for Bank of Nova Scotia and whether there's still a rocky road ahead or is there potential opportunity. I'll also cover the risks before I talk about the rewards. And of course, I'll talk about the dividend safety and my closing thoughts. What am I going to do with my position, whether I'm going to sell or I'm going to buy more? I'll let you know what my thoughts are. So, if you are an income investor or you just want to buy bank stocks because you want to buy more safe and secure stocks that are pretty boring but predictable, or you're looking to check out Bank of Nova Scotia because you think it might be undervalued, you want to see what my thoughts are, then you got to check out this video today. Hey everyone, if you want me to make more of these videos for you, please hit that like button, smash it, smash it, smash it, so you let me know to make more of these videos for you. So let's get back with the video. Now, Bank of Nova Scotia was founded in 1832. Now, it's one of the top 5 banks in Canada, and it's been paying a long history of dividend payments. In fact, 43 payments out of 40 in the past 45 years, which is like amazing. Now, when it comes to its revenue sources, it has 3 major arms, being the Canadian banking system, the international banking system, and the global banking and market system. Now, Bank of Nova Scotia, which is traded under the ticker symbol BNS, has an international presence. Now, before I jump into what that really means, I would want you to focus on the majority of its revenue, which is 60% of its revenue is from Canada, which I think is pretty stable. Now, given the situation that we're in, which is exceptional circumstances, we don't know what it lies ahead in the upcoming quarters for Bank of Nova Scotia. And that's why I want to segue into the latest Q3 earnings because I want to give you the key highlights, the key takeaways I got, and what it means for the stock price. Now, not surprisingly, when I look at its earnings and revenue for the past quarter, it's dropped quite a bit compared to the last quarter. In fact, compared to last year, it's dropped 34%. Now, when it comes to its revenue streams, let's break down where it's dropped. Particularly, it's dropped 53% year over year when it comes to the Canadian banking system. It's dropped 93% year over year when it comes to its international banking system. And then when I look at its global wealth markets, now this is a bit surprising. It actually increased 6% year over year and 60% year over year when it comes to its global wealth management and markets. But overall, it's dropped significantly in terms of earnings and revenue. We're looking at 34% year over year drop, as well as 31% in diluted earnings per share drop year over year, which is not surprising. Now, the earnings and its revenue drop is not so surprising. I mean, all the banks are experiencing the same thing, well, except for TD Bank. But what I'm really interested in is the actual loan provisions because we're in exceptional circumstances. We're expecting to have a lot of loan defaults. So what does this really mean for Bank of Nova Scotia? So when I look at its Q3 earnings, I could see that they have a 56% increase in loan provisions over the past 2 quarters, which is like an increase of $2 billion. Now, this is crazy, huge, a big surge. So they're expecting potentially to have more loan defaults in the upcoming quarter, which is why they're increasing their loan provision. Now, in terms of total loans, because they've allocated like a lot of money to loan provisions, I want to know what out of that loan portfolio is allocated to risky loans. And I could see in its $636 billion worth of total loans, they see about 4.1% of 636 is allocated to the riskier types of loans, which is the oil and gas sector, the retail sector, the travel sector. So you can see that 1.5% is allocated to energy and oil fields. We've got retail is 1.3%, and we've got transportation 0.5%, and hospitality and leisure is only 0.8%, which is pretty good. I would say the entire spectrum of loans, that's a pretty small percentage allocated to exceptional circumstances that we're facing right now, which is a positive sign. Now, remember I pointed out that the international banking was where they had allocated a bunch of loans. You could see that the reasons why, because they've loaned out a lot of money to Mexico, Peru, Chile, Colombia, because they are actually really focused in the Latin America. So they're, because of the exceptional circumstances that we're facing right now, they're expecting to have a lot more loan defaults in those specific regions because they are one of those hardest hits when it comes to this year. Now, I've shared quite a bit of bad news about Bank of Nova Scotia, the fact that they've increased their loan provisions, they're expecting to default on a bunch of loans, but 4.1% of its total loans to, riskier loans because of the exceptional circumstances that we're facing right now. But what does this really mean big picture wise? Because Bank of Nova Scotia has been around since 1832. So let's check on its financial health. So I'm going to jump into its financial balance sheet. So when I look at its financial health, I can see that in terms of its debt, it has about $199 billion in debt. But what's amazing is that it has a cash and equivalents of $358 billion and with an equity of 70 billion. So it's pretty healthy. In terms of the grand scheme of things, if it has that much cash, it could easily pay out its debt like within 1 year if it chose to do that. Now, that's not how banks really make money. Now, remember I shared, its earning and its revenues have dropped this year, compared to last year. But when I look at its profit margins, it's like, holy smokes, we've got 26% in profit margins, even though its revenue and earnings have dropped this year. Now, in the past, it was around 32%, approximately. So, yeah, it's dropped in terms of profit margins, but it just shows how much money banks are making on their customers. It's like, holy smokes. So, in a nutshell, Bank of Nova Scotia has a pretty healthy balance sheet. So let's talk about the risks before we talk about the rewards and the dividend safety. Now, before I jump into, is its dividend safe? What are the upcoming years potentially looking like for Bank of Nova Scotia? I gotta talk about the risks before we talk about the rewards. So when I look at the risks, one of the top risks I see, well, is the way these banks make money is the spread between Bank of Canada's interest rates versus what the banks charge, the regular customer. So with banking interest rates going to be all-time lows for the foreseeable future, they're not going to make as much money compared to past history. Now, of course, they're going to find a lot of ways to make more money because you can see that its profit margin is amazing. So I'm sure that they're going to find different ways to creep back up to 30+%. Now, it might not be immediate, but I'm sure they're going to use their creativity to find different ways to make money off of their customers. Now, the second biggest risk I see is that they are like banks, like any banks, they're tied to the economic health of those countries. Because of its international presence in the Latin Americas, because of the exceptional circumstances that we're facing right now, it could be a volatile market for the upcoming quarters. Now, this could be a short-term blip compared to the next 50 years, but I'll just say it's still a risk, and I'll just say it is tied to the economic health of that country. And if that country is hit hard by the exceptional circumstances that we're facing right now, then we could see a bit more drop in its revenue and earnings in the upcoming quarters because a lot of its revenue is from its international presence. Now, the third biggest risk I see, which is not talked about really in any video right now, is the housing impact. Now, the way banks make money is they make interest income off of a ton of loans. And a lot of those loans are mortgages and HELOCs. So if we're going to, ride out these crazy circumstances this year any longer, we could potentially see more of a dent and impact on the housing market. Now, the housing market is a lot slower. It reacts a lot slower because it's based on people losing their jobs, then not being able to pay their mortgage, and then it could really hit the loans in the longer term. So we're probably not going to see that type of impact potentially until next year. So all to say is that if it's getting a lot of its revenue from mortgages and HELOCs, and if there's a housing impact, then they can lose a lot more revenue when it comes to mortgages. Is this dividend safe? Well, Bank of Nova Scotia has a huge reputation of paying out its dividends. In fact, in the past 45 years, 43 out of the 45 years, they've increased their dividends. In fact, during 2008, during the massive financial catastrophe, its sales and revenue dropped 6% and 19% respectively, yet it still paid out its dividends. Now, it didn't increase its dividends during that year, but subsequently the year after, it paid out its dividends, maintained it, and its payout ratio was 48%, which is incredible. But I mean, this is all in the past. Let's look at what its payout ratio is right now because it'll tell us, is the dividend safe and what does it look like for the upcoming quarters? So in terms of its dividend payout ratio right now, we're seeing 63%. Now that's a bit higher than what is projected in the past, where average was between 40 to 50%, but 63% is still pretty good. And in terms of future payout to shareholders, they're projecting that by 2023, they're going to hit 52%, which is normally its average dividend payout ratio. I think in terms of upside over the upcoming year or two, I'm not expecting much from this bank stock. I mean, in terms of even its overall history of returns, it hasn't really returned that well. But in terms of if you're an income investor and you're looking for predictable income, well, Bank of Nova Scotia is one of those stocks that have a huge reputation of paying out its dividends. I mean, it paid out its dividends even during the financial crisis. So it has a huge history of paying out its dividends. But in terms of undervalued, yes, it's undervalued, but does it have an immediate upside over the upcoming year or two? I'm not too sure about that. Given the uncertainty over the upcoming quarters, given the potential more and more loan defaults, I'm expecting that its earnings and revenue is going to underperform, and it's going to take about a year or two before we start to see its stock price recover. So in terms of upside, not seeing so much, but in terms of its dividend distribution and dividend growth, I'm expecting that it's still going to do well, but I'm not expecting like double digit growth from this bank stock. So I'm pretty neutral about this bank stock. I'm not really going to make actually any more positions in Bank of Nova Scotia. I already own enough shares in Bank of Nova Scotia and I'm happy with it. Everyone, if you found this video super helpful, give me a thumbs up. And plus, let me know, are you planning to make more positions in Bank of Nova Scotia? Let me know below. Or you're saying, hey, no way, I'm going to check out other bank stocks, then let me know in the comments below. I'll see you in the next video.